Welcome to The Explainer. Today, we're diving into a question that honestly stops millions of investors right in their tracks. You've got some cash saved up, you're ready to invest, but what's the right way to actually do it? You've probably heard this one before, and it just perfectly captures the challenge, right? We all know the best time to invest was yesterday, but the how, that's the tricky part that gets us stuck.
So let's make this real. Imagine you have 1 lakh rupees sitting there, ready to be invested. What do you do? Do you go all in right now, or do you play it a bit safer and spread it out over time? That's the big question we're going to unpack.
All right, to solve this, let's get to know the two main players in this game, the two contestants battling for your investment. So in one corner, we've got the systematic investment plan, the SIP. And yeah, it's kind of like the tortoise in the story, slow and steady. And in the other corner, the lump sum investment. That's our hare, fast, direct, and ready to sprint from day one. So the SIP, our steady tortoise, is all about discipline. You're investing a fixed amount of money, say, every single month. The cool part is, when the market is down, your money automatically buys more shares. And when the market's up, it buys fewer. This awesome automatic trick is called rupee cost averaging. And then there's the lump sum, our bold sprinter, the hare. This is a totally different beast. You put all your money in at once, and it starts working for you from the get-go. But here's the catch. Its success really, really depends on when you jump in.
Okay, so theory is one thing, but let's get into the evidence. Let's look at the numbers and see how these two actually perform when the rubber meets the road.
All right, let's kick things off with scenario one, a bull market. We're talking about a time when the market is just consistently climbing. Imagine we put our 1 lakh to work back in January 2020, just as things were really starting to take off. And look at that, no real surprise here. In a market that's just going up and up, the lump sum takes the crown. It makes sense, right? All of your money was in the game from the very beginning, catching every single bit of that upward ride. Okay, but what about when things get crazy? Scenario two, a super volatile market. Think about that huge crash in March 2020, followed by that incredibly sharp V-shaped recovery. Now that is a real gut check for any investor. And here's the shocker. Lump sum still wins, but, and this is a massive but, it only won if you had the guts to throw all your money in right at the bottom when everyone else was running for the hills. Let's be honest, that's incredibly hard to do. But let's talk about the absolute worst case scenario, the thing that keeps investors up at night. What if you invested your entire lakh right at the very peak of the market, just before a massive crash? Think January 2008. And this is where the SIP becomes the hero of the story. It's not even close. In this worst nightmare scenario, SIP is the clear winner. Why? Because that rupee cost averaging thing we talked about went into overdrive, snapping up tons of cheap shares during the crash, which set you up for a way better recovery. So if you just look at the raw data, you might think, okay, lump sum usually wins. Case closed. And yeah, historical data shows it wins about 2/3 of the time. But this is the exact point where the math stops and our messy human emotions take over. Because let's face it, putting a big chunk of money into the market all at once is psychologically really tough. You've got that constant anxiety, did I invest at the wrong time? You've got the gut-wrenching fear of regret if the market drops the next day, and that little voice telling you to just wait for the perfect moment. A moment that, never actually comes. The SIP, on the other hand, is almost like a psychological cheat code. It's designed to help you get out of your own way. It removes the impossible burden of trying to time the market. It builds that investing muscle through discipline, and it helps you do the one thing that truly matters. Just stay in the game, consistently. So we've got the numbers and we've got the human element. With all of that in mind, how do you actually put together a framework to decide what's right for you right now in 2025? Okay, so who should consider a lump sum? Well, it might be for you if you genuinely have a high tolerance for risk, you have a really long time horizon, we're talking 10+ years, and maybe most importantly, you have the stomach to watch your investment potentially drop without panicking and selling. And when does an SIP make the most sense? It's probably the way to go if you're just starting out, if the market feels a little pricey to you, or if your main goal is simply to build a consistent investing habit and, sleep peacefully at night without worrying about every little market fluctuation. But here's a thought. Maybe it doesn't have to be an either-or decision. A lot of really smart investors use a hybrid approach. They combine the best of both worlds. They keep a steady automated SIP running in the background, but they also keep some extra cash on the side, ready to pounce with a lump sum when the market gives them a discount. All right, enough theory. Let's talk about how you can start your journey today. Look, The biggest enemy here is analysis paralysis. Overthinking it so much you do nothing. So let's fight that. The key is to just start. Seriously, in the next 24 hours, you can do this. Figure out what you can afford to invest, decide on a monthly SIP amount, pick a platform, choose one or two simple funds, and hit go. It's all about making progress, not finding the perfect solution. At the end of the day, the best strategy isn't what wins in a historical backtest. It's the one that you personally can stick with through thick and thin. So the real question isn't SIP or lump sum, it's what's your next move? For more such blogs, reach out to www.multigyan.in, and don't forget to like and subscribe to the Multigyan YouTube channel.